All right. Good morning, guys and ladies. Good to be with you this morning. Welcome to the Hurley Investments Trade Findings and Adjustments, July 22nd. Just have a few things off the bat. Really just kind of following up with last week again from the 15th and keeping it short and sweet today. So if you have any questions about anything from last time or just any questions you have, just throw them in as you get the time to put those questions in, and we'll kind of get them answered as we go. I'm not going to wait at the end, so today just putting them in as soon as you can, and we'll just do it along the way, answer questions along the way. So getting started. Wanted to follow up with the First Solar trade. So last week I said First Solar needs to hold the support price of about 85 at the 200 DMA, day moving average. So if you take a look, that was the 15th. The next day it fell pretty easily right below it. So if you followed those instructions, you would have waited and not done anything with First Solar. But since then, we've seen First Solar come all the way down to the 50-day. Pretty nice bounce on the 50-day. Now we're just kind of stuck between, well, stuck is the wrong word because we really don't have enough time to see whether we're going to bounce around between the 50 and 200 day. But we do have a nice bounce on the 50-day that today I feel like we can go ahead and get on that leap bull call trade. And what we'll do, I'll put it on for Kevin's little slush fund account here. What I'm thinking is an 85-105 leap bull call. We previously talked about 90 and 110, but it's not, that was when it was up here closer to 90, of course, closer to 85 where it was holding on to that price point. Now we're sitting just below 85, and really our bounce point is 80. Almost to the penny. So let's see. You can see the low on the 19th was, on Monday, was $80.14. So let me write this in. Let me just say, I know it's not sitting at 85, so why would I be looking at an 85 leap long call? The answer is we're getting it a little cheaper than at 85. And really that's it. A little cheaper. If we go down to 80, it'll be a little more. I kind of like on a type of bull call, we can go a little above the money and keep the prices where it's reasonable. So looking at 85, let me say we've seen a confirmed bounce on the 50-day moving average and $80 support. I'm not going to say looking at, I'm going to say getting on leap, bull, call today. What does that look like? 85. Let me actually go to First Solar. Just look at these, and yeah, I still like the numbers there at 85. The dates, and let me clarify. Let's see. You remember it was January 23. And it's a bull call calendar. Except it's only 1L. December was our short call. What was it? Just December month. $105 short call. Let's see, let's get the long on first. 85 right here. Add option, sell. December 5. That gets us cheaper, closer to our original thought process. I think the original 90-110 was like a 1350, and then it had come down to test 85, and it was closer to 1250. So we're in that same range. It was now bouncing off 80 and trading at 82.70. And we're getting a similar price range. I'm going to do one contract. And Just gonna put it at 50. See if I get filled. Not sure if Kevin wants one or two set of contracts, but I'm going to start with one. He can add another later if he wants. Imagine with the cash up here he's got plenty to work with, but he also has mostly leap calls in this little account. So yeah, some stock and protective put there, but most everything's calls, so we're cash heavy to dollar cost average those. So I'll go with one for him, and if he wants to get a little more aggressive with it, he can add another one. So that order is open, looking to get it filled around 1250. And of course, when you put an order in, you know, if there's not a lot of orders going out, it typically puts that order at the low end of the bid and ask range, and you know, the price, available price changes. So we'll typically try and be patient with that and kind of let things sit until it's garnered a little more interest and we can get filled at a decent price. We can also look at it end of day and just kind of see where things have gone, and if we want to just get it on, we'll put it on a market order and get it on. So that is the trade, and I forgot to take a picture, so let me get that on. So hopefully you can at least see that. It's kind of grayed out there because it's an actual order and I just pressed to modify. No, actually, we can just copy this. There we go. So let me erase this, delete, and I'll copy this one where we have an actual. And we're still 1250-ish, so pretty close. So I imagine we'll get filled at some point. It's just not right now. And that's okay, don't get anxious. That's a easy way to lose unnecessarily some money here and there. If you try and get on a limit order and it doesn't fill right away, just be patient. Give it some time. We've got all day. Not changing a ton, so that's where that's at, and so I'll leave that. Check it. I think one contract for that account that's heavy in all these calls. Plenty of cash, need that cash, be able to double up or quadruple up if these positions keep falling, so that we can dollar cost average and have a greater percentage of opportunity, a greater chance to be profitable when they come back up. That's the key. That's always the key. Dollar cost averaging is our best friend. Talk about it a lot, and hopefully it's getting enough to where you're sick of me telling you, but it really is our greatest tool that we have to be able to manage trades and investing in the stock market. And it's the greatest advantage we get in the stock market, because a lot of other places we don't have that chance to dollar cost average the same way. You buy a rental property, you're hoping to get some renters in, or VRBO, or whatever the case is, so that can pay off the mortgage you have on it, and you're really not profitable. unless you are bringing in more from that rent, which usually you can at least bring in the same amount, hopefully more than the mortgage costs, and you're hoping to get that paid off sooner than later, so that you can be cash flow positive and bringing in income. But really, you know, it's not working until that point. And what if the market goes down? We're thinking about our housing market right now, how ridiculous it is, and how high it's gone up, which is great. Again, though, how do you dollar cost average? You really have to sell high. So if you've got a property now, sell it. But then what are you going to do? Got to find somewhere else to buy. And guess what? Prices are still high. So that's tough. Really, it's, large conglomerates and big private equity groups that buy and build tons of these rental units, and they have a greater ability to dollar cost average properties because they have hundreds of millions of dollars to buy and sell. Stocks, much easier for you and I to do that, and much more liquid. So that's another comparison. What if there aren't buyers? 2008, nobody can get a loan. Well, that was kind of more right after when they restricted everything. But housing market crash, banking, financial crash, and you can't build houses cheap enough for people to afford to buy them because they don't have jobs. So you're in a situation where you've got properties and it's not a liquid market because there aren't a lot of buyers, right? Stocks are pretty well always liquid, especially in a sell-off. You sell tons of stuff. I guess the point I'm trying to make is just digging in this idea of dollar cost averaging to give us the chance to be profitable if things don't go our way, and be even more profitable when the stocks get back to where we got into them, right? Those principles are important. It's an advantage we get in the stock market. Warren Buffett understands these principles. That's why he holds so much cash when markets are at all-time high, like right now. A lot of times, and I'll just say dollar, I'll say, why does Kevin hold so much cash in his account? Because dollar cost averaging is our friend and greatest ally in managing money in the stock market to be profitable. You either have to have cash to come up with more cash to buy more shares when they fall, you have to have some cash in the account set aside to take advantage of these dips and crashes, like we're talking about with Kevin's little account here. Or protect shares with puts, so you can dollar cost average, I'll say DCA, without coming up with more money to do so. If stocks fall. It's a pretty simple concept and pretty simple philosophy. And really that's your best tool that you have for trading in the stock market. That's why we're more apt to buy more time with these leap calls, and some of these trades that we do, we stress the longer time so that we have the opportunity to dollar cost average and be profitable if it goes the wrong way, or even be more profitable if it goes the wrong way and then comes back to where it was when we entered the trade. That's what we did with Baidu and Boeing and a number of those positions that we were able to be extremely profitable with last year, and especially, Baidu as it headed up earlier this year and took a lot of profit there, and now we're kind of in a new situation. It's come back down, and in that process again of taking advantage of it. That situation is now kind of different and interesting because as it has fallen, luckily we had added short calls against our long leap calls as it came down for Baidu, and now those calls are 100% paid for. And in a roundabout way, we're dollar cost averaging, but only because we've taken out risk in that trade and not because we need to buy more now that it's lower. So now we have no risk in there. We really have all the opportunity in the world as it goes back up. So just some points and thoughts. Don't really have much more to go. I'm not over. Not seeing any questions come in. So it sounds like you guys are all on the same page. So I think we're good to go. I got to get the let me see. Here's our first solar. Get that posted in here. 85,105, about 1250 price. January 23.85 strike, leap call. 105 December 105 short call for about 1250. Trying to get filled today, and we'll look at it last hour to get it filled if it doesn't in the meantime. Is meantime one word? Apparently it is. All right, guys, that's really it. I think that's all I needed to type in there. Just doing a once over. and I think we're good. All right, guys. Wasn't the first time I went over dollar cost averaging, and certainly won't be the last. It's important to consider with every trade and every investment you make. So being profitable over time, dealing with the process, checking your charts and checking your economic situation, and just using your best judgment to put yourself in a better likelihood of success in the future. And that's really all it's about. All right, guys. Thanks so much. I'll look to see you guys with us on Monday, and listening in to Kevin on our market commentary. So good to be with you again. Take care and have a lovely weekend. Bye, guys.